Here's 5 things you should look for other than the dividend yield when looking for a good dividend stock to invest in. Using an example, McDonald's. So the obvious thing you look at first, like we talked about before, is your dividend yield. For McDonald's, your dividend yield is about 2.27%. So on a yearly basis, they will pay you a percentage of how much you own. So if you own $1,000 worth of McDonald's stock per se, you're going to get $227 a year. And that's going to get split up into every quarter, essentially. Some dividend stocks pay differently. Sometimes they'll pay twice a year, 4 times a year. Some of them even pay you monthly. So just make sure you know that. Okay, so the next thing to look for is the payout ratio. That is basically the percent of earnings paid out as dividends, right? So usually a healthy typical range is, I would say, around 30 to 60%. And for McDonald's, it's 59.98%. So out of their earnings, 60% of their earnings goes to paying out dividend shareholders, essentially. So that right there is a huge plus point for McDonald's because most of their earnings goes directly back to you. Next, look for the 5-year dividend growth rate or the yearly dividend growth rate. For McDonald's, the 5-year dividend growth rate is 7.18%. That means these companies increase the actual dividend itself, the dollar amount, every single year. And that's a good sign because as the price go up of the actual stock, they should be increasing their dividend. Another great thing to look at for dividend stocks is how much free cash flow they have. So basically, free cash flow, the way to think about it is the cash left after capital expenses. So this is really crucial for sustaining their continued dividend payments because if they don't have free cash, you're just going to stop paying your dividends, right? So for McDonald's, they generated, it says 6.67 billion in free cash flows. So that already tells you there is a lot of room to not only sustain dividends, but grow them over time. The last thing, and I think one of the more important things to really look at when investing in dividend stocks is dividend consistency. This is basically how many years in a row has the company consistently paid dividends? If a company pays dividends for like 5 years and then just stops after that because of, let's say, an economic crisis, that's not really a good sign. It's understandable, but wouldn't you want a stock that does better than that? McDonald's, believe it or not, has paid dividends consistently for the last 49 years, and they haven't missed a single year. That's through all the good and the bad times. I think that shows the company is committed to the shareholder. McDonald's is not just the go-to place for a quick meal. It's the go-to place to make a steady income off dividends. Follow for more.